Hello and welcome to another update video about oil. We are going to take a look at WTI today, and what I wanted to share with you here is this price action from the December lows. I haven't covered oil for a while now, but to be honest, there wasn't much going on. Now we see a little bit of price action, but it's not the cleanest chart. It's not the clearest chart. It's quite messy. I have to say that, yeah. So the idea is that wave 2 bottomed here. The move up is really, too substantial for anything else at the moment, for any other interpretation. So I have to assume a wave 2 pullback finished in December. Then here we already talked about this 1, 2, 3, 4, these overlapping waves within a diagonal. And then this is quite ambiguous. So there are different interpretations that could apply here. One interpretation I want to show you first. This is valid but not so reliable because it would include a very, very much extended fifth wave. But we would be dealing with a scenario in which this is wave 1, basically a leading diagonal in a larger third wave. And we completed waves 1, 2, 3, 4. We are now in wave 5, which is an ABC structure. And we're basically now moving up in a C wave, and we completed an initial 1, 2 setup. This wave 2 bottomed around the 11th of March at around $76.50. Now we could start in a third wave, or could be unfolding in a third wave, then get a 4 and a 5. So where could that C wave take us? So there are a few ways of how targets can be calculated. We can take, first of all, the length of wave A, then we go to the low of wave B. We're looking at the 100% extension. That's at $83.73, but we only have 3 waves, so we need actually 5 for a C wave. So it's probably going to land somewhere around $85.70 or $87 or even $89. But then we have a very much extended fifth wave, but it's a valid interpretation. As soon as we have all 5 waves complete, we can add a support zone for the wave 2 pullback that would follow. So this is a bullish scenario, which at the moment is valid as long as the last swing low is holding, this wave 2. So as long as the price is now staying above $76.80, we can focus on higher to basically just watch for the development of 5 waves. Once we have these 5 waves complete, the entire move from the December lows should be corrected in an ABC structure, in a pullback, which obviously must not go below the beginning of the wave 1 and must not go below the December low. That's one interpretation. It would work. What I doubt about it, or I'm a bit doubtful, because this fifth wave would be so much extended. So that means we also have another, let's say, alternative interpretation in which I say the wave 1 actually topped here. But then the problem with that interpretation is that the wave 2 is so shallow. It's all possible, but it doesn't leave us with a high confidence pattern. I just show you that, explain that to you, to show you and share with you that this really leads us into a direction in which we don't really have a high confidence pattern. But then we could say that from this March low, we have here another 1, 2, 3, 4, 5, and it would do something like that in the white count. Basically, this would then be the next lower degree, because we already completed the 5 waves here on the 1st of March, had a very shallow wave 2, and then the third wave is unfolding, and within the third wave we have another 5 waves. So in this count, which I would call the white count in the alternative, because they are both not offering us very high probabilities, but also in this scenario we should not break below that 76.80 level. So that seems to be a very important level. Now, don't get me wrong, in the yellow count, we are allowed to break below that level, but really only after we completed 5 waves to the upside. That means whatever happens, the charts need to be reinterpreted with a break below 76.80. But for now, the trend is, well, ideally goes a little higher. I gave you the invalidation point. I gave you the next upside targets. And then we need to see if the price stops there. Well, if it doesn't, okay, then it most likely is the white count. As you could see, this is more aggressively bullish. So if we really get a break above the $89 level, I would probably say it's going to take most likely the direct route higher in a third wave. That's my update about oil. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then please check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.